Hello and welcome from Trend Signal for our review of the data and events the week beginning the 27th of July. We're already a day into it, but still plenty of events to discuss. So we're on Tuesday the 28th. We've already had the Ifo Business Climate, which actually improved in July more than expected at 108. That's probably on the back of the situation in Greece improving somewhat since the last report. So Ifo Business Climate quite steady. We have had durable goods as well, which came in a lot stronger than expected, with the core rate coming in at plus 0.8%, way better than the plus 0.4% expected. All very relevant this week as the Federal Reserve meets in a two-day meeting starting on Tuesday, culminating on Wednesday with a statement about their intentions. We're not expecting any rate rise in the United States this month. Janet Yellen has gone to great lengths to explain what she's up to. In a recent congressional testimony, she said she didn't rule out a September hike, nor did she guide the market towards thinking September was a done deal. So we're none the wiser, really. Hopefully this Wednesday at 7 o'clock in the evening, the statement will give us better insight into what the Fed is thinking. But I think with these stronger data that we're seeing with durable goods, with improving housing market in the United States, that a rate rise is starting to look pretty much inevitable. There was a 50% chance of a hike in September. I think that's more likely now that it will be in September. If it's not September, it's going to be October or November, pretty much a shoe in there. Other data out this week, we have the advanced GDP number from the United States, a lot stronger, showing in the second quarter 2.6%. They've revised the first quarter up now, and we're expecting further positive revisions, so adds more weight or more fuel to the Fed's thinking about a rate rise in September. So that'll be closely watched. So the key events this week really are all US focused now. The Federal Reserve, as I say, on Wednesday evening, GDP data on Thursday. On Friday, no great shakes in terms of the US markets, but we have the manufacturing PMI out in China at the weekend. China has really hit the headlines in a big way this week. Monday saw one of the biggest falls in Japanese equities ever, a fall of 8.4% on the Shenzhen market, which has really spooked the market somewhat. However, this headline in the FT on Tuesday morning, Chinese stock market didn't fall quite as much as some were anticipating. It still had a bit of a roller coaster ride, ending up down just over 1% on the day. But that's given a little bit of comfort to the European markets on Tuesday morning, which are in the plus column. But it's an extraordinary turn of events in China, where the Chinese state is effectively propping up the stock market, mainly because the massive amounts of household debt that are tied into the stock market, and they can't really afford to see the stock market collapse in a way that would damage consumer confidence. But it's an extraordinary situation that the state is effectively trading the stock market, a stock market that's obviously had some fairly ludicrous gains and subsequent volatility, and expect more of it, I'm afraid. I think it's highly likely that we're going to see swings of that sort of percentage again in the coming days and weeks. Really, a lot of it's based on the commodity route, which the commodity route is a symptom really of what's happening in China with the slowdown affecting all commodities really. Oil continues to fall quite sharply. Another report on the FT here, sliding to the lowest level in 4 months. It was only in May when the price was a good 20% higher than where we are now, but that was then, and as production continues to increase and the shale gas boom shale oil boom, I should say, in the States continues. It seems with potential reduction in demand as China slows, that the price of oil will remain under pressure, which is obviously what we're experiencing at the moment. That's it really for the data this week. There's nothing much else. It is an important week, obviously, with the Federal Reserve. Let's see how those commodities react as well. Gold had a big fall last week of over 3%. Crude was up just over 4% and continues to fall this week. Copper was also down over 4.25%. So it'd be interesting to see, as I say, how those markets react with the Chinese slowdown. Anyway, that's it. Thank you very much for listening. A fairly limited amount of data out this week, but nevertheless quite important as we enter the sort of what we can describe as the summer doldrums, as next week is the first week in August. Liquidity can be lower, volumes lower, but volatility can remain quite high, so it's worth remaining focused, obviously. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.